Hello everyone. Today we are discussing about credit. What is credit and how it works? So let's get started. What is credit? The word credit has many meanings in the financial words, but it most commonly refers to a contractual agreement in which a borrower receives a sum of money of or something else of value and commits to repaying the lender at a later date, typically with interest. Credit can also refer to the credit worthiness or credit history of an individual or a company. As and she has good credit. In the world of accounting, it refers to a specific type of bookkeeping entry. Key takeaways. Credit is typically defined as an agreement between a lender and a borrower. Credit can also refer to an individual's or business credit worthiness. In accounting, a credit is typically of bookkeeping entry, the opposite of which is a debit. Credit in lending and borrowing. Credit represents an agreement between a creditor and a borrower, between a lender and debtor. The debtor promises to repay the lender often with interest or risk financial or legal penalties. Extending credit is a practice that goes back thousands of years to the dawn of human civilization. According to the anthropologist David Graeber in his book Debit, the First 5,000 Years, there are many different forms of credit, common example including car loans, mortgage, personal loans, and lines of credit. Essentially, when the bank or other financial institution makes a loan, it credits money to the borrower who must pay it back at a future date. Credit cards may be the most unique courts example of credit today, allowing consumers to purchase just about anything on credit. The card issuing bank serves as an intermediary between buyer and seller, paying the seller in full while extending credit to the buyer, who may repay the debt over time while incurring interest charges until it is fully paid off. Similarly, if buyer receive products or services from a seller who doesn't require payment until later, that is a form of credit. For example, when a restaurant receives a truckload of product from a wholesaler who will be who will bill the restaurant for it a month later, the wholesaler is providing the restaurant owner with a form of credit. Other definition of credit. Credit is also used as shorthand to describe the financial soundness of businesses or individuals. Someone who has good or excellent credit is considered less of a risk to lenders than someone with bad or poor credit. Credit scores are one way that individuals are classified in the terms of risk, not only by prospective lenders but also by insurance companies and in some cases landlords and employers. For example, the commonly used of FICO score range from 300 to 850. Anyone with a score of 800 or higher is considered to have exceptional credit. 740 and 799 represents very good credit. 670 to 739 is good credit. 580 to 669 is fair, and a score of 579 or less is poor. Companies are also judged by credit rating agencies such as Moody's and Standard and Poor and given letter grade score, representing the agency's assignment of their financial strength. Those scores are closely watched by bond investors and affect how much interest companies will have to offer in order to borrow money. Similarly, government secretaries are graded based on where the issuing government or government agency is considered to have the solid credit US Treasury, for example, are booked by full faith and credit of the United States. So that's enough for today. Thank you for watching. Wait for the next part.